The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We got the S&P up 2 points. We have the Nasdaq currently down 5. The Russell's up 1.5 with the the Dow right there up 55 points on the day. And so a lot of things just flattening out at the moment, going a little bit of sideways action across the board on the indices. We got gold right now moving. It's down 15 points. We have silver down nearly 2%, and copper down a little over 0.5%. Oil's down 1% as well, down 95 cents on the day right now. We got natural gas up almost 0.5%. We got corn down 7 points. That's almost a 2% move on corn. And we have soybeans up 6 points on the day. Euro dollar is currently up 8 pips, with pound dollar down 22, Aussie dollar up 27. Euro yen's up 3, US yen's down 9, pound yen is down 9 as well. And then we got the dollar CAD down 16 and the dollar franc down 18 pips on the day. And so let's look at some of the movements and market actions. Before we get into that, let's first check out and look and see if we see any potential trading opportunities that we might be able to, take advantage of. And so one of the things that I'll do is I usually go in, I pull up the scanner, and I'll throw it on, binary scanner. And so, you take that step. If you haven't got access to it, check it out. You can get access to it over there on TFNN's website. And log in, get access to the deviation levels as well. So even if you're just a future forex trader, there's a lot of value in getting access to those deviation levels. And once you've done all that, then the next step is to make sure you've logged into your Nadex account. If you don't have a Nadex account, then what you'll want to do is hop on to TFNN.com right here, and then click on the Nadex banner over here on the right side of the page. After you've done that, click on Trading and Demo Trading Account to just get you started. Okay? So again, Demo Trading Account to get you started. And then the next thing that you're going to do is fill in the form. It takes literally about 10 seconds. And you can get that activated right away. And if you fund an account, you can get that account extended as well. If you need to know how to do that, just email me, let me know. I'll be glad to help you on how to get that demo account extended. And so that way, it's wise to practice. I still use my demo account when I'm testing out new ideas, new strategies. And I highly recommend that every trader test in demo, because of course demo is a lot kinder to you than experience. Experience is an expensive teacher in the world of trading, and experience of hard knocks is a very, very, very expensive education. So University of Hard Knocks. So you want to make sure you do demo everything out and try it out. Well, once you've done that, you'll be logged in over here on the scanner, and you can see your accounts and go in and go, okay, well, what do I want to look at trading? So let's say I want to look at potential gold and silver trades for the day. And let's say I want to look at doing some premium collection. If you're new, I have covered this on some of the past videos, but I'll go say 65 to 95. And then what I'll do is I'll pull up charts of gold and silver, and there's all different kinds of charts and chart styles. I'll just pull up some basic ones over here. And let's see here. Let's throw this one up right here on the screen. We'll look at it. Just grab these two. And so we'll go in, we'll look at, say, gold, and we'll look at silver. And, sort of look at the trend and see if you can, see something's going on. I'm usually looking at 5 minutes. 1 minute's a little bit just too fast to really give you a good indication of the trend. Zoom in on that area right there, see what you can see. Make sure, if you had different platforms, had different settings, make sure you do go into your settings. And make sure you're looking at the extended sessions that apply. That way you get all the data, your indicators are plotted correctly, everything else. And on Thinkorswim, the way that you do that is you just go again into the settings tab, you go to settings, go to, say, futures, and say show extended session. You can even highlight it if you want to. And it'll show you basically the non-pit hours versus the pit hours right there and the activity that's going on. And then you can zoom in, of course, add that in. And now we can look at these two markets. We can see, oh, they're sort of trending up, but they got a little bit of a negative pullback at the moment. And that just lets you sort of like quickly see that trend. I mean, overall, we're sort of flat, right? I mean, it's looking at gold and silver. That's not seeing a whole lot of defined trend. And so with that, okay, well, let's see if there's any kind of good looking trading opportunities that are coming up. And so that's where the scanner is going to come in. Notice I usually will pull up the scanner before I pull up the charts if I'm doing like a short-term trade like this, okay? Where I'm looking at maybe a 15-minute trade, because I just want to see if there's an opportunity. If there's not one, I don't need to look at the chart. Now, if there is one, I still need to look at the charts. And so if we go over here, we can scroll down, we can see what's coming up. Now, notice it has Monday and Friday. Why does it have Monday and Friday? Because we're at the end of the day, so we don't have any intradays. And I haven't put any time filter on, so I'm seeing weeklies. So I want to go up here, and if I want to look at ones that expire here, just say in the next half hour, 0 to 30 minutes. So we're looking at 65 to 95, 0 to 30 minutes. That's the only filters I'm using, okay? And now it shows me what opportunities are sitting there, if there's anything that's even worth trading. Maybe there is, maybe there isn't. On silver, we got one at 20.30. That's only a couple ticks away. So only a couple ticks away right there on silver. That's a buy, saying that it would stay above 20.30. And something I'll teach you that I like to do is I'll go in on silver, and let's say I pull that up. I'll open up that ticket, and then if I don't like the premium collection trade, and I'm not saying like we're just going to do this right now, so just bear with me as we go through it. So we do have, I guess, technically a ticket at 0.005. We got 8-9 ticks there. If I don't like the trade on the premium collection, if I think it's too close, I could always invert the trade. Okay? So if I thought, hey, you know what? I like that risk reward. It's really close. Now, when I do this, I'm usually looking at like ones that are $90. But if I like it, I could always, again, go in the opposite direction in order to do it. So, but on this one, I mean, we do have a decent distance right there. And it's not a massive profit, but, nevertheless, it's a profit. So we got 2.030. It'd have to drop down. So what is that, like 9 ticks to, be a losing trade on that. And so that would be the strike that I would choose. And you have less than 15 minutes. You actually have 10 minutes to go for the trade. So that's not bad as well, putting everything together. And so, I mean, you could do 1, you can do 10. You can go ahead and just put that in there together, and it'll execute the trade for you. The biggest thing to remember on these trades, okay? Again, the biggest thing to remember is if you're doing them, you do not, you need to go in and you need to have the discipline, okay, to exit if it hits your trade at the market price. And what I mean by that is if the market actually went down to your strike and hit it, that you would get out. Okay, so if it went down to 20.30, you have to be willing to take the loss and get out of the trade. And there's no other option. You can't just hop in and do that. And because if you don't do it, your loss is going to be so large that I don't care what your winning percentage is, it's going to wipe you out. Now, occasionally you may get hit in what's called the dark zone, the last 2 minutes, where you can't really get out of the trade. And it's not that Nadex forbids you to, it's just there's usually not a lot of quotes there. But as a trader, you need to have really good risk management on there. Okay? Now, the other one we got here is we have a potential gold at 12.75. That's pretty high up. I wouldn't do premium collection on that because I'm only getting like $6 on there, and after you add in fees, you're only getting a few dollars. If I thought it actually had the ability to move up to 12.75 here in the next 15 minutes, remember I mentioned flipping? I could click on the buy side over here, and then I need to click on the buy price. I'm not going to execute this one right now. I need to see something else to give me a little confirmation that gold's going to be rising, that far. And I mean, that's not huge, but 3 points is still a decent move at this time of day here in the next 15 minutes, because I think everything is going up. I think silver's going up. I think gold's going up right now. I mean, that is my bias. Will it go up to 12.75? That's the trick. So let me show you something that I like to do that I'll play with. And I should have done it already, but I'll go ahead and do it just right here on 2 contracts to let you see. So I'm doing 2 of them at 12.50, okay? So I'm going to put that in, get those 2 executed, and now I'm going to set in a sell at 25. Now I can do it on one of them, or I can do it on all 3 of them. So if I do it on one of them, okay, at 25 and hit place order. Now, by doing this, okay, by going in and doing this trade, what I've done is if gold just pops up a little bit, I could get filled on that 20. Now, I only did a couple because, the amount of time and how everything's laid out. But it just has to move up a little bit, like maybe 1273.5, okay? Maybe 1274 to fill me at the $25. That would then remove my risk on the other half of the trade, which is now free to make a very large profit, like an $80-something profit. And these are pretty sweet trades. Now, I will tell you, I usually do them at night. And what's pretty cool now is they've added, I can't wait till they add more, but they've added euro dollar and they've added dollar yen to the intraday nighttime trading. Okay? And since they've added those in, you can actually do this strategy a lot. And basically, it's just, again, you're doing a multiple of 2, and you're getting in and you're getting out of half when you've basically, doubled the price. So if I bought at 10, I get out at 20, that type thing. And you have to play with it, and you want it to be really close, and you want it to be a small move, and all that stuff. And a lot of times, they'll just be really cheap at night. So it's something that you can look at, something you can play with, but it's a strategy I've been having some fun with that you might like. So, and now if I wanted to turn this into a double binary, right? Remember, since I bought these, you can now see I could actually get, if I wanted to, I could get the 1272s at 72.50. If I wanted to add on that additional risk, that would be a possibility. If it stays above it, here's sort of a cool concept for you. As long as it stays above 1272, and let's just say I just did one of them, okay? Remember, I did 2 at like $12 or whatever, so I risked $25. If I do just one of these, and I hit place order, and it stays above 1272, but let's say it doesn't ever fill my other contract over there that I did. So up here, right, when I did 2 of these, and let's say it never fills my take profit on this half, it never moves up enough, but it does stay above 1272, well then the profit I make on the premium collection would pay for this one, actually for both of them. So because I'd make $29, and I risked 1250 times 2, I risked 25. So I'd actually net out a $4 profit on the trade, okay, not including fees and all that fun stuff. But I'd net out a $4 profit on the trade, and I could make $12.50 on top of that. Plus, I had the potential to make as much as, like $87.50 on the other contract. Now, I'm probably not going to hold it all the way to expiration. I'm more likely to go in and set my take profit. Now, if I'm doing more than 2, I'll actually layer these in. I'll do like a 50 and a 70 and an 80. But I can go in and set my take profit to, sell this other contract out. Let's just say right now we'll set it at 43. So if it does hop up to 12.75, I could actually set it higher if I wanted to. I could set it at 70 or 80. And so if the market does pop, then I get a nice profit. But anyway, so there we go. Now, that was a whole lot of different information at one time. But hopefully you're able to put some of that together. All right, we'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So now, one thing that you will notice that can freak you out if you're uninitiated, okay, is you may see all of a sudden like that you're losing a ton of money here in the last couple minutes. And that could happen, but what you need to understand is there's no quotes. Okay, nobody's actually posting a trade here in the last couple minutes. And so it's basing that on some random $2 quote that somebody has in there, they sold it or they're trying to buy it super cheap or just something random like that. And so that loss, as long as this thing stays above 20.30, you're solid, okay? And so we can look at it right over here. You know, we got, a decent amount of distance. We have literally seconds to go. It's done. I can see on the order ticket here, it's closed out, and we collected our profit. So we did make money on that trade. $15, times or whatever, how many, contracts you did there. So, nice little profit on the trade, and it's just doing its thing. We also have this one going on the gold 1272. Now, optional, you could go in and you could set a take profit like at 95 if you wanted to. So that is an option of something you could do, is to go in. I've even seen some, one of the things I talked about with another trader, they were actually looking at doing a double binary strategy where they went in, they bought at 70, and they bought another one like at, say 10 or 15. And so they bought it at 70, and they bought the one above that like at 10. When the one at 70 got to 80, they would exit. So they'd cover the $10 risk on the one above it. And they've removed that big risk out of the entire trade now. And now, as that $10 one continues to move up, they have a lot of potential profit in the trade. So some, pretty cool little simple things to do. Now looking at this, what are some of the things I could look at that could, have helped me with these trades? Like I said, the first thing I just look and see, is there an opportunity that exists on the scanner itself? So is there something there that I think, hey, this would be a good trade? Also, I'll look at, deviation levels. We're at a 1 deviation level on silver. So for the day, we're sitting right at a 1 deviation level. So that's in our favor, right? Because I should really expect it to not just continue pushing down. Our low on the day is, just a couple ticks above where our strike was. So unless it's going to just, fire down and finish on a new low, the trade should be profitable as well. So there was a lot of little things like that adding up that helped us out. You could also go in, you could look over at the 5 minutes, and a couple things that you, might notice. Let's see, I know I saw this over on gold. Yeah, we'll go over on gold to look at it. But anyway, so we got the 1 deviation level, and we got just the, simple, trend to start to, move on up. And, one simple way to define trend is throw on an 8-period moving average. So right there you go. And so you can just start to see it's starting to close back above that. It's starting to move up. So that was another thing that you could use. So a lot of little things like that, you start putting all the pieces together, they really help out quite a bit. And, gold, now there was actually a better entry on gold that happened just a little bit earlier for doing on this type of trade. Not only did we have the 1 deviation, we had the bounce off of that, okay? But also, one of the really cool things about this is we had a nice volume spike that took place right at the deviation, which is probably one of my favorite trades out of all the different strategies, is a volume spike deviation trade. See right there how the volume is more than double the volume on both sides. And so we get that volume spike. It's been in a downtrend, so it's been trending. We get a volume spike. We're at a deviation level. And then right here it closes, this volume is half that volume. And then the falling bar breaks the high. It's like right here. So it breaks this. And that becomes a reversal trade, a contrarian trade. And there's 2 ways to do it. If you want to be a little more aggressive, you could go towards the next deviation level. If you want to be a little more conservative, you could go in and maybe buy a deeper in the money binary. So like right here, I could buy an in the money binary and just collect premium as I expect it to be flat or move up when that happens. And as you see, it's been sort of flat to up during this time frame. And so it's, there's a lot, like I said, there's a lot of ways to trade these, but I love using volume spikes. And I love them most when they're at either a 1 deviation level or at a 1 dev high to low, because that gives me, just a lot of different benefits on my trades. As I'm going in, I'm trying to find out what the best trade is for me to use and how I can best take advantage of it, really across the board. So, all right. Let's see, I'm just trying to go through. I want to give you as many little tips and tricks to help you that I can. Let's see here. So look for deviation level trades. Where there's a volume spike, fade that volume spike. Look at in the money trades. Look at premium collection trades. If you don't like the premium collection trade, if the risk is too high, the trade is too close, on down the list, then you could also consider going in and reversing it like we did, where we did that higher one, and then setting a simple, easy take profit on the trade, like at say 20, buy for 10, sell for 20. All right, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So all our silver contracts expired in the money. Got a nice payout right there on that. Remember, payout equals profit plus initial risk on the trade. And initial risk is always capped risk. As on Nadex, everything you do, all the risk is always capped. The gold in the money contracts, the 1272s that I bought, they expired in the money. The 1275s expired out of the money. But the nice thing is, since I brought in $29 on the 1272s, and I only risked $25 on the 1275s, and I actually netted a $4 profit on the trade with a lot of potential. In other words, if it would have flown up, I could have made a lot of money on it, but I was able to do a neutral trade with a lot of profitability built in. So that's sort of how the double binary works, and there's actually a ratio double binary because I bought 2 of the 1275s. So what I went in is I went in right here and at the 1275 level, I bought 2 contracts, okay, at the cost of $12.50 each. Now you could have done 200, so just making it simple. So at 1275 right there, and so I bought them at 1250. And since I bought 2 of them, my total cost, my total margin, my total risk on those was $25. To cover that, I went in and I also came in here and I got myself a 1272 binary contract, okay? And let's see here, there we go. And that allowed me to actually bring in $29, which covered the $25 risk. And then I did a couple things. One is I wanted to cover the risk and make $4 or whatever. Okay. Two is I took one of those 1275s and I set it to basically get out at double. And that would eliminate the risk on the 1275 one completely. And then I had the other one set to get out at 43. Now, like I said, if I did like, say, 20 contracts, I'd always do half at double, but I may do like, say, 5 of them at $43. So if it gets to the strike, it's out. And then the other half, maybe I'll do it 80 dollars to, if it like goes up 1276 or 1277, I make a really huge profit on the trade. And but it's a cool way to maximize profit on premium collection whenever the market's not moving that much without having to pay for that big profit potential. Because the problem with out-of-the-money binaries is, honestly, you're just going to get burned more often because the market has to move to get there. Now, the payout is higher, but the probability is lower because, again, the market has to move like up to 1275 or, whatever, at least has to move some for you to get your profit. Whereas on in-the-money binaries, the market doesn't have to move at all. It can move in your favor. It can even move slightly against you. And you can still be profitable. Now, of course, the problem on those is the risk is higher. So that's why you got to manage your risk with them and be willing to get out of that trade. You don't have to worry about a stop loss on an out of the money. You do need to worry about a stop loss on an in the money. And here in hopefully the next, I'd say 3 weeks or so, we're going to have a plugin for doing stops and OCO orders on Nadex using our scanner. So I'm pretty pumped about that because I cannot wait to have all that automated so I don't have to be sitting there and watching it. Anyway, so those are all the main pieces right there. But I just wanted you to see, you go in, you find that. We got a little nice volume spike reversal trade going on. We do a premium collection trade on that. So you had several trades. You could have went in on this trade right here. Could maybe have done a 1 o'clock. Definitely, could have done a 1:30 on this trade right here. And got a nice, decent premium on the trade. So be looking for those. They're all over the place. And, you may only get 1 or 2 on a market in a day. Maybe sometimes you'll get 2 or 3, but you probably get 1 or 2 because, obviously it's not like it's going to go to the 1 deviation level a whole bunch. And, you sort of expect it to hit that once. And sometimes it'll go down a deviation and back up a deviation, and you can actually get them in both directions. But they're so simple, you can actually put them on multiple charts, and just when you see volume spikes, just, hey, look for it to go back in the other direction and bust up. And you can monitor, 5, 6, 7 contracts at once. There's a lot of ways to do them, depending on how much time you have till expiration. Right here, you got a 10 o'clock expiration trade. You could have went in, and there's a volume spike, downtrend. It bust up finally. You get in. You choose the 10 o'clock expiration on gold. Profitable trade. Now, that's not at the 1 deviation. That's not our favorite mark. So, again, my favorite one is the 1 deviations. But, I'll do them at 0.5. I'll do them at 0.7. I'll do less contracts when I do them. So I may do, say, 20 contracts at a 1 deviation volume spike reversal. Maybe I'll only do 5 at a 0.5, or I'll only do, maybe 10 at a 0.7. So just because I know, I have a higher probability when the whole deviation move is taking place. All right, well, that wraps that piece up. Let's go ahead and see what's on the roster for the news this week for you to be able to trade, take advantage of different things happening in the markets. And give me 1 second. Pull this up for you. So I'll try to get the whole little plan put together for news every week in advance, so that way I know what I'm going to do on the news and how I'm going to trade it. We got some, we got some good stuff coming up this week that you can take advantage of. All right, one more piece, and I'll have it all set for you. So, okay, what we got today, there's really not anything happening except for tonight we have the monetary policy meeting minutes. Not expecting any kind of major move. Expect a little volatility, but not any major volatility. 20 to 30 pips off that. It could probably even be butterflied if you wanted to as a potential trade. But, the problem is it has a 7:30 p.m. announcement time. And there's only 7 and 11 p.m. expirations on the Aussie dollar right now. Now, remember, there are, hourly expirations after 8 p.m. all the way to 5 p.m. now on the euro dollar and dollar yen over on Nadex. So they added those in, and they're going to add them in on the other ones, in the coming, month or so. Hopefully sooner rather than later. But if we had, say, an 8 p.m. expiration on Aussie dollar monetary policy meeting minutes, that'd probably be something I'd butterfly right into. But just be aware of it. So if you're trading the Aussie dollar, in case any surprise statements come out about their decisions about raising or lowering interest rates, that you'll be ready. And like I said, have that on your trade calendar roster there. Tomorrow, really, we don't have anything that big coming up. We we have a few different trades, but I'm just trying to go, is there anything that's just massive that you need to be aware of that we can really, really take advantage of? And not really. So you'll see a lot of stuff on a news trading calendar if you go look at it, but just because it's on the calendar doesn't mean it's going to really make the market move. A couple things to be aware of. We got the German Zoo economic sentiment report. That'll cause some volatility in the euro around 5 o'clock in the morning, and if you're up that early trading. And then tomorrow night, Bernanke is going to be speaking at 7 o'clock. This isn't like a major press conference. He's speaking at an economist club. There'll be some Q&A. And so, of course, that could have, obviously can give you a little nighttime volatility. So that might make it a good nighttime time to trade gold because Bernanke's talking. So that could have an impact on the gold market. So that's just a couple ideas for you. Now let's get a little bit more into the meat and potatoes of the week. What's coming up? The 20th is just loaded. It basically is your day to trade. I'm going to come right back to the 20th. We're going to go to the 21st and 22nd. We're going to wrap those up first just because they're so light comparatively. And then I'll just spend the rest of the time there on the 20th. But on the 21st, you got German flash manufacturing PMI coming out at 330. French flash usually doesn't do anything. We also have the PPI and unemployment claims at 8:30. Not really a massively tradable event unless the numbers are just really off. And then we have the Philly Fed Manufacturing Index here in the U.S. at 10 a.m. Again, not usually a massive event unless the numbers are off. And then on Friday, we have the core CPI, core retail sales CPI, retail sales on the USD CAD. And I haven't been completely impressed with this trade. So as far as the moves, it can be a decent trade. I'm going back and I'm even doing some more review on it tonight to look at it. But I mean, the issue is the probability. When it moves so much that the average range is 57 pips. That doesn't sound big, except for consider this: only 25% of the time does the dollar CAD actually break 50 pips after these news announcements on the CPI. So if it only breaks at 25%, if it only hits 50 pips 25% of the time, but the average range is 57, that means you got to have a 25 pip when it doesn't hit, and you have to have a 75 when it does hit to average, around 50. So when it moves big. It just doesn't move that often. That number again is going to be coming out on Friday, and it comes out at 8:30. So it's not necessarily the easiest trade to do. A possibility on it would be to butterfly it, because again, it doesn't usually move that large. Now, if it moves, it's going to move and you're going to lose, but only 1 out of 4 times should it really move far enough to matter. Because only 25% of the time does it move 50 pips. But just be aware that it can do that. So always have that reality check in your any risk management that you do. Let's see here. Okay, so that really is Monday, Tuesday, Thursday, Friday. Very light. Wednesday is a different story. Wednesday we have a lot of news. I'm going to be traveling. I'll be doing some of this probably at the airport. But I'm going to be traveling out to the International Trading Expo, the Vegas Expo, and be looking for me out there. It'd be fun to meet up with some people. But let's see here. I'll put up the page for it if you're going to be in Vegas. So let's see. I think that's it. They really don't make simple links, do they? We got moneyshow.com/trade show /loss_Vegas/traders_expo. So nice long thing. I'll post it over there in the den and make that easy to get access to. I know Tommy's going to be speaking on Friday, and so there'll be just a lot of cool events happening and a lot of cool people out there, and it's just a fun time. It's Vegas, right? So anyway, so we're going through. We'll be doing that, but I want you to have the plan and be ready. So let's look at what we have for the 20th that you can consider in your trading strategy. And what we got is the first thing is going to be the MPC facility votes and the bank rate and all that stuff that's all coming out at the same time. So that information is going to come out on the 20th. And when that comes out, what should you expect? What kind of range do you think will actually take place? So, you should expect based on how things actually are released. And we're looking for an average move, actually, and I'm going to have to update some of this stuff, but about 80 pips. So we're looking for a move of about an average move of 80 pips on the pound dollar, 85 pips on the pound yen. But 91% of the time, it breaks 50 on the pound dollar. Only 62% of the time does it break 50 pips on the pound yen. So really, pound dollar is that favored instrument to trade on this. And that's going to come out in the morning. So it is an early morning trade, but it's a 4:30 trade. And now a lot of people will go in and they'll, like at 11 or 12 o'clock at night, they'll go in and they'll put if they can get a really cheap straddle on, because I'm expecting at least 50 pips on pound dollar 90% of the time. So if you can get a cheap straddle on, they'll put a straddle on, they'll put their take profits on, and they'll choose the 7 a.m. expirations, okay? And let the thing do its thing overnight while they're asleep. So you don't have to necessarily do this while you get up. I'd recommend, of course, demo trading that so you learn how to do it and sort of see how it works out. But it's a cool way. You can put a trade on, go to bed, get up, and hopefully have some money in your pocket. And if not, you have defined limited risk, so you're okay. And then let's go on. We have a lot more stuff happening on that day as well. We're going to go and we're going to have the, let's see here, the CPI coming out. So we've got some U.S. numbers that are going to be released. And most of these don't move that much. So if I go and I look at the U.S. core CPI, the U.S. core retail sales, again, these are numbers that I'm not super impressed with. They can move quite a bit on the euro, and that's really the only instrument I would straddle or strangle on the U.S. core CPI. The average move is 60 pips, and 79% of the time it moves that far. All the other ones have a 50% or less, and some of them much less average. Moving that far. Now, a lot of them will move like an average 40 pips or 50 pips or 60 pips, but the percent of time that they break 50 is so low. So it's like either they move a lot or they don't move at all. And I like it where the odds are slanted, in my favor. So in the euro dollar, that would be the currency pair I'd be straddling on the core CPI number that's going to come out. And that number comes out at 8:30. Now, remember, one of the new things is you have hourly expirations happening on binaries, so there will even be a 9 o'clock expiration on the binaries. You probably want more time. You can do the 10 o'clocks, the 11 o'clocks. You could even look at the 3 o'clocks. So, if you're doing a strangle. But I prefer the straddles pretty much almost on every news announcement I do. I'd say 90% of the news announcements I do are straddles. And that's because you can get out of break even a lot. Whereas on strangles, being binaries, you're going to lose or you're going to win. There's no in between. There's no break even usually. All right, so that's your core retail sales, your CPI, your retail sales. We got all those numbers coming out. And like I said, that would be really the only one that I would be interested in straddling out of the group would be the euro dollar. The worst one is the dollar yen. It has an average of high to low of 45 pips, but only a little over 16% of the time does it actually move 50 pips. So it's actually the worst pair to look at for doing that. Now, what about going into it? Because there are some good stats going into some of the other announcements that are coming out that morning. We have the existing home sales announcement coming out. So that comes out, boom, it's done. Now what's happening? Well, what we can look at is 90 minutes before the existing home sales, we could look at doing some butterflies. So, and because, why can I do this? Well, because the expiration, because of when it comes out, I could look at doing some existing home sales trades, like right before. So, like Aussie dollar usually moves, 25 pips. Dollar yen usually moves 30 pips. Euro dollar before existing home sales moves 40 pips. Now, I'd probably avoid euro dollar because euro dollar usually has the biggest move on the CPI report. Okay, so I might want to avoid that one. But the dollar yen might be a great one because it has the lowest average move, period, on the CPI and it, along with Aussie dollar, on the pre-butterfly existing home sales. All right, there, and we'll talk about the FOMC announcement when we get back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the dynamic diagnostic trading hour. Looking at some dynamic stuff here I got going on with the deviation levels. One of the things that working on with the program right now I'm pretty excited about, we're going to actually have weekly deviations. So if you want to look at longer term trends, you want to use them for swing trading, you want to use them for weekly binary contracts, we're going to get those deviation levels up and running and working for the weeklies. And so we're just trying to make everything as dynamic as possible to fit traders' needs of all different trading styles. And also, there's a confluence factor, because if you're at a weekly deviation level and a daily deviation level, that obviously is going to give more strength to that right there. And I've got a question over in the den there, somebody asking if we're working on the stop loss. Yeah, we are. I just signed the contract and put the money in for the programming team now that's working on this stuff for me. We had to write out all the specs and get it all done. And so, but yeah, we're actually making good progress at this point on it. So, because we have the team in place, we have the specs written, and now it's just a matter of, it'll take them probably somewhere between 20 and 40 hours of programming to get it done. To tie it in, it'll be a plug-in for the scanner, which will allow it so that way, yeah, exactly, so you can get up and go to the bathroom and you have a stop loss in place. So it's nothing like coming back and finding out, that was an expensive bathroom break. So what I mean by that, and the reason I'm bringing that up, is if you trade on Nadex, all the limit orders on Nadex are limit orders, okay? So you can't do a stop order in the platform. And so if you want to go in, which some people go, well, why should I even need to do that? I mean, if you're doing premium collection, you want to limit your risk. Maybe I buy at 80, I'll get out, if it hits 50 or something. So that way I cap my risk. If I'm doing spreads and I want to mirror the market, I may want to do ones that don't have any premium built into it. So, because if I do a limit order, if we go in just to show you an example, and I go on here and grab a contract, put it up there, if I put in, a buy right now, and I get in at this contract, and it's like, okay, well, that's my order. Boom, it fills me, okay, and there we go. And now I go, okay, well, if it gets down to, this is such a low-risk strike, but if it gets down to 1116.1, then fill me. The problem is it's a limit order, and limit means this is my limit. This is the worst I'm willing to pay. It's the lowest I'm willing to go if I'm selling, or it's the highest I'm willing to go if I buy. So if I do 1116.1 and hit place order, it's going to instantly fill me. Now, it'll fill me at the best possible price. It'll fill me at 1116.2. So it filled me at a better price than what I put in, but it didn't get down to 1116.1. So why did it fill me? Well, it filled me because I said, if I want to do a limit order, I'm saying, fill me at this price or better. I'm saying, I'll take a fill at 1116.1 or higher if I'm selling. So instantly it's going to fill you, so you can't put a stop in. So what we're doing over on the diagnostic scanner is we're adding in a piece to the plugin, so that way whenever you click on a contract, and we're going to add this first into the plugin, and then the second phase we're going to add it into the trade tracker as well. But let's say I go over here and I put in this contract, and let's say I was going to buy it at $90, okay? There'll actually be an additional section down here, and what it'll do is it'll say if the underlying indicative here, if it actually hits a certain price, then get me out of this contract. Okay? So again, if it hits this price, get me out of the contract. I don't want to be in it anymore. And it'll say get me out at the market, and then we'll have an offset of say like 10 ticks. So I can say get me out at, when it hits this price, 10 ticks off the market. So if the market's at 50, put in a limit order at 40, and it'll sell out at 40 or higher. So the market's at 50, it'll get you out at 50. So that's what we're working on putting together right now. I'm pretty excited about it. All right, we all have a great day, and I'll see you on the Diagnostic Trading Hour tomorrow, where we're going to go over the FOMC news trades.